When your estate includes life insurance policies, your estate can be pretty large, even though you might not feel wealthy. The life insurance policy will provide benefits to your survivors that perhaps only a wealthy person could provide. So we see many situations where it's the ownership of the life insurance policies that will boost a person's estate up over the estate tax exemption, and which makes some estate tax planning necessary. In those situations, people might be thinking of reducing their estates so that there is no estate tax problem. And a very good way to reduce the estate is to make sure that somebody else is the owner of your life insurance. Remember the rule. The rule is if you're the insured and you're the owner of the policy, then the death benefit is going to be included in your estate for estate tax purposes. So the technique is to make somebody else the owner, so that at your death, the death benefit will not be part of your estate tax for estate tax purposes. Now, when that happens, usually an irrevocable life insurance trust is used to become the new owner. So you enter into an agreement with your trustee. This agreement, however, is not revocable. It's irrevocable. We've spent a lot of time talking about revocable living trusts. So I don't want you to get confused. This is different. This is irrevocable. But it's done by an agreement, and you name a trustee, and when that agreement is in place, the policy is transferred to the trustee of the irrevocable trust. And if you survive that transfer by 3 years, then the death benefit will be out of your estate. It will not be taxed as part of your estate at your death. Because of that 3-year rule, lots of times it makes sense to set up the irrevocable trust and let the trust buy the policy instead of you buying the policy then transferring it to the trust. We don't want you to buy the policy and then transfer it. That triggers the 3-year rule. We'd much prefer that you set up the trust, give cash to the trust, let the trust purchase the policy, and that way you avoid the 3-year rule. There are other gift techniques that we're not going to go into here. They're specialized and usually get involved in estates that are larger, where people are interested in doing more sophisticated things to get the value of their estates down. One technique relates to just your home, where you transfer your home in an irrevocable way to a qualified personal residence trust. Another technique deals with transferring other assets, where you transfer assets to a trust and you retain the right to receive an annuity from that trust for a certain number of years, and then after that period your trust beneficiaries are entitled to the assets and you're not entitled to anything anymore. There are other techniques that relate to making transfers of interests in partnerships and other business entities. The issue is when you transfer minority and non-controlling interests, what is the value of those interests? Typically they're not as valuable as something that's liquid, that you can sell right away and turn into cash. These are assets that are not readily turned into cash. There's no real market for them. And so the values for gift tax purposes can be lower. And then there are techniques that relate to those who have charitable inclinations. When you make gifts to charitable organizations, the gifts are eligible for deduction in preparing gift tax returns. And so basically they are not subject to the gift tax. And of course there's income tax deduction associated with them as well. And so there's some interesting planning techniques that involve transferring assets to trusts that have a charitable purpose, and the trust can divide benefits between charities and non-charities, individuals, and if the rules are followed, you can get a good result for both. We'll go into all of these gift techniques in future programs and podcasts. But for now, that's the end of our presentation. I hope you've learned something from this podcast. And if you have any questions, of course, we'd like to be there for you and help you answer them. But for now, thank you and goodbye.